Good afternoon, traders. It is Saturday, May 24th, 12:27 p.m. Eastern Time. Welcome to another video with Digital Goatz Academy. I'm your host, Antoine Farrar, and welcome to my weekly review. So let's just talk about the things that happened in the market pretty much this entire week. So what I have before me right now is US 30, and let's get rid of our annotations real quick. So US 30 on the weekly time frame, as you can see. Now, the one thing that I do want to highlight is that based off of the information, like now I've had this information since pretty much like 2022, 2023. So as you can see, US 30 is still respecting this imaginary trend line that we have. And that's that move that happened earlier this year. Well, not earlier in this year, in March, where the market pretty much got brought down. It created resistance. January, it brought down to do what? Create a swing high. Now, we obviously know that the market can come back and respect these areas. You can kind of see from, the past. We look at the past in order for it to make sense of the present to kind of predict what may happen in the future. And as you can see, based off of this trend line, like I said, it's imaginary, so it's not going to be spot on, but you can see it's still respecting it. Every time it touched it or crossed through the zone, it pretty much pushed up. Well, I mean, the trend line isn't there, but you can see it's respecting a trend up here, right? So you see the market drop down, pushed up, market drop down, pushed up, and each time it's what? Creating higher highs and higher lows. You know what I'm saying? In order for the market to push out, breaking resistance. We can even look at, I don't want to, it's not going to let me draw it, but if you just look at my crosshairs, where my uh where my pointer icon is, you can see this resistance area over here, right? This high around 36,000, around 36.2. And if we drag it, if we drag our icon all the way, we can see that the market dropped 36.6. So that's still the what? The previous high of this resistance area. Now, as you can see, price is building that bullish trend in order to bring the market up. We're definitely going to break these highs. It's just how is it going to do it? You know what I'm saying? The momentum is strong to the upside from here. I like that. I like that we can see that the momentum is strong. And how do we identify that? Let's go to your Hakanashi candles. So you see each time it's not giving you the same thing like, well, what you would probably see on a daily time frame, but you can see here again, going using the past information in order for it to represent, the present, right? So we can see that price has been bullish the same way over here, right? Bullish, bullish. It's not going to be, clean, but we can see that more than likely this momentum is going to take us past this high. And then whenever the market decides to retest, this is going to be our high that the market is going to come back to. You see what I'm saying? So yeah, I like that. Now let's hone into what actually happened this previous week, right? Let me go to the daily time frame. Turn it back to a candlestick chart. If you're tuning into this video as well, make sure you hit that like button, comment, and subscribe. It definitely helps my channel. We have been growing, and I appreciate for everybody that has been returning. I know I say this all the time, but I'm not strong in the streaming community yet, but I hope to get up there. And the fact that we're getting more views, people are actually coming back to see this information, I appreciate it. But the numbers viewed don't match up with the subscription. So please, hit that subscribe button on your way in or out. I understand that you could probably easily forget about it, but when you get captivated into looking at the information, you kind of get sidetracked. But just remember that, you know what I'm saying? It greatly helps Digital Goatz Academy. But like I said, let's hone in. We're on the daily time frame now. So what the market did, it ended bearish last week. Well, Friday. So it ended well, on a smaller time frame, it ended bullish, but on a daily time frame, it ended bearish, right? Now, the thing that I want to point out is that we had a gap here. We can see that there's been areas that the market didn't retest these gaps or push back into these gaps, but they did like try to test them. Like for instance, the market tried to test this gap over here. I'm not sure if it meant to do that or if it needed to come down and test this area. But you can see that we have a lot of gaps that the market just blew away from. I don't think that we're going to get the market to come all the way back to these levels. But again, I don't write the rules when it comes to trading. I just follow what the trend is doing, right? So if we do get that, if we do get those areas where the market decides to push back down in order to correct itself, because we are bullish, in order to correct itself, then that would make sense. But I just don't think that we're here. This is our first gap that the market left from, and it's been building that bullish momentum. Again, how do we identify that? Akanashi candles, right? You can see that it's just looking at it, you know what I'm saying? The visuals of it, there's more green than there is red. That's not saying that the market couldn't push down all the way here, but that just brings my confidence in that, yeah, we are bullish from this position. You know what I'm saying? And we should continue until we get like a major, just like we saw over here, major candles that push down and bring the market down even further. So if next week we start seeing, basically, if next week closes bearish, then more than likely we are coming down back to these levels. But I don't think that that's happening. But again, like I said, we just follow the trend, see what this information shows us this coming this week. We have Memorial Day on Monday, so be careful, traders. You shouldn't even be able to access the market. And for foreign exchange, if you are able to access the market, it probably won't even be worth it because the market will probably be consolidating, moving sideways, slow. You might get a little bit of momentum in the opening of New York, but after that, I don't recommend traders. I don't recommend traders trading at all Monday if your broker even lets you. Now, the one thing that's going on this weekend is that Federal Jerome Powell, the president of the Federal Reserve, Jerome Powell, he's actually speaking one of his speeches this weekend. Now, when you look on one of the news outlets that we use, I use my FX book. I know some people use Forex Factory. You can use investing.com. I mean, there's so many out there, just ones that represent the information on what you need. Now, what I care about what he says, but what traders need to care about is that that's high impact news. So basically the market is still going on during the weekend. We just can't access it during the weekend besides cryptocurrency, right? So whatever he says in this meeting tomorrow, that will have the outcome after Memorial Day. Now you could see the potential, like if Memorial Day does allow, if your broker does allow you to trade, you'll see that reaction. So I expect like a major gap, either up or down. You know what I'm saying? I'm looking more to the upside, but we'll see because the fact that the market pushed back into these gaps, this gap zone, I think we're going to run away from this position and then try to come and test it in order to create that support structure to buy the market back up. We did hit resistance, you know what I'm saying? So you look at this, it makes sense. I've always talked about that. The market is going to react to these areas. So this is resistance, but that's not saying that it's trying to sell this market off. It's just resistance, you know what I'm saying? So it's going to react. This is probably a shallow pullback. And if it's not a shallow pullback, we actually have our areas where the target may go. If it starts showing us that we're selling and this is the top, we're more likely selling all the way back to the zone, possibly to create, I wouldn't even say this far down, maybe around like 39, because that was the initial break of structure, which was around like 40,000, 39,000. But again, let's not get too far into the future. We know that the momentum has been to the upside, you know what I'm saying? So let's not try to think about the selling. We just know that the pullbacks are going to be pretty vicious and we just have to be ready on the buy side. You know what I'm saying? You're not going to be able to predict the pullback, which is fine. But when you get this information, you can sit here and say, okay, I think the market will probably push down this way or push up this way based off of that candlestick information. Remember, technicals tell the story ahead of time. We did this shit already like 2 weeks ago where we were waiting for the decision on the trade talks between China and the United States, but we had already forecasted that the market was probably going to be a positive outcome just based off of the technicals and where the state of the economy needs to go. Because if it did go any lower, you know what I'm saying, if the tariffs were impacting the economy so much, I mean, I'm looking at that as possibly going to war or a financial crisis across countries, you know what I'm saying? We weren't there, you know what I mean? And it just makes sense because a lot of these leaders, their investors as well. So it makes sense that they would want to still protect their assets, even with insider information, you know what I'm saying, insider knowledge, because they don't control this stuff. This market can wipe anybody out. You know what I'm saying? It's basically an algorithm. So it can wipe anybody out and you just adjust your conditions. Obviously, things can be manipulated through like banks and stuff because of their surplus of money. But other than that, a millionaire can get wiped out in this market. It has happened before. You know what I'm saying? So don't think that the powers that be are in full control. Things are out of control for them. And to put things back in order, that's when they start stepping in, such as like the Federal Reserve, such as like, the I want to say the Trump administration, maybe even the Chinese administration. I don't know what their administration is called, but so I went on a little tangent there. But anyway, so looking at the technicals, I do think that the market was only trying to collect this equity. And as you can see, we have structure below. That's why I say it's important to kind of keep your annotations. One, this was a previous support structure, and this was consolidation. I know that because I color code certain patterns within the market when I'm, charting myself, right? So we have support right here. We have another gap right here. We have consolidation right here. And then we have another support. And the fact that the market rejected this, you can see that it hit this support area and even kissed the top of this consolidation. So we have two reliable structures that should validate that we are buying up. You know what I'm saying? We do have to wait until the market opens up and then clears this information this weekend. And again, we could just be going into a ranging area right here or consolidating until the market decides it wants to break out. But if it starts consolidating, I'm almost certain that the consolidation is to push up, not to push down. So just be careful that this entire week, because of how that information is going to be slow because of Memorial Weekend. So you probably won't get any data movement or strong movements until like Thursday, end of Thursday, going into Friday, just to be, you know what I'm saying, if we're not continuing to trend up here, yo. But this whole entire move could be consolidation in order to push the market up. So just be prepared for that you don't get trapped in seeing that the market could possibly consolidate and you think that it's going to continue trending up. That's one thing that I did say. But like I said, I do think that, we're still the momentum is to the upside. So we just have to break up out of this area. And like I said, I do think that we're still buying from this position. We just have to see how the market is going to play once we open up, probably Tuesday. Indices probably won't open up until Tuesday. So just pay attention to that. You may be able to read it on TradingView, but your broker shouldn't allow you to trade it. And I don't even think you should be able to read it on TradingView, right? So let's look at S&P. S&P reacted the same way. Now both of these did close, but like at the on the weekly time frame, like at their daily can or below their previous daily candles. So that is one thing to kind of, look at. But if we're just looking at it on the weekly, to me, it looked like this entire move was just a pullback in order to retest this candle. I think that we are ignoring this gap. I think that the market wanted to do one for US 30. I kind of look at it as the leader for indices. So I kind of look at what US 30 does, the other indices should react eventually when they finish their market cycle. So you can see that US 30 retested into the gap, but if you look at S&P, it was like a shallow retracement and it kind of tested the top of the gap. You know what I'm saying? If that makes sense. And my gap is this black zone right here. And we're maintaining above a zone that I had already anticipated. So my first buy zone was what was it? 60. Where's this at? Yeah, my buy zone was into the gap. So this was a previous buy zone area into the gap. But the one thing that I was looking at is that once the market dipped down and pushed back up above 57.75 is where I was looking at us to remain bullish. So even though we're testing these zones anything above 5,700, 5,775, I look at it as we're still buying up. It can go a little bit below that, but as long as it's still showing bullish momentum, I think we're buying up from here. So again, we just have to wait till Tuesday morning, like after nine. I would recommend after 9:30 clears because it can get extremely volatile with all that information being packed in on Tuesday. Because like I said, on the market should be frozen on Memorial Day and probably open back up towards London session, if not like 5 p.m. market recess Eastern time. So yeah, that's pretty much what happened for indices. Like we were shown, well, we pretty much just pushed down. That's all we did this entire week. We pushed down, and it just looks like we were correcting ourselves in order to push back up. We have a lot of imbalanced candles left over. So say we are pushing down, the market is going to want to retest these areas. So even if we were to continue start pushing down, the market is going to want to collect this imbalance for sure. Just whenever it decides to. But again, I do think that this was the move in order for us to establish some type of structure in order to bring the market even higher. So a lot of analysts have S&P going to 7,000. Well, really pit stops, right? 6,100, 6,500, 7,000. I agree with that because that's the only thing I can see the market doing. Anything like I can't see it going any lower. It's just been showing us once the market is up, it's up. So you can't look at it like, oh man, it's going to be reversing. That's what a lot of traders do just because the pullbacks to be a little bit more aggressive, right? So same thing with US 30. Like US 30, I didn't hear what analysts said. Well, we've already hit 45,000, right? We've already hit 45,000. That's where we actually created resistance. It would make sense for it to go to 50K. I believe that we are going to 50K, if not by the end of the year, going into the next year. So you can see I already have my target set. I'm buying up, but I don't have a position that I'm just holding for this. I would definitely love to hold that, but with the swap fees and the margin call, with the swap fees and just how like you start building up that debt, you know what I'm saying? It ain't worth trying to hold a trade unless you had, I don't know, $100,000, and even then you couldn't have an extreme big lot size because again, that swap fee could mess you up. But I am looking for US 30 to go to 50,000 this year. With how Bitcoin has been rising, to me, it just makes sense. I don't see these assets allowing cryptocurrency just to dominate them. You know what I'm saying? If that makes sense. So I do believe that we are going to $50,000 this year. Towards the end of this year, maybe going into next year. It looks like an impossible hurdle, but y'all got to see how the market reacted when Trump won the polls. You know what I'm saying? Like it reacted that way. You know what I'm saying? Very extremely bullish, and it was kind of actually like surprising how it happened. You know what I mean? Like what was this, November? I think this was the day, right? Where are we at? November. Yeah, so November right here. That's when. Market straight, I watched it like straight got extremely bullish, created this false sense of structure, pushed up, that was the resistance, and then brought the market all the way down in order to keep the momentum going up. Look at how the technicals are showing us. We broke down I had this annotated like I don't know how long ago, you know what I'm saying? But this was the previous high on the weekly time frame, probably on the monthly time frame. Like a better, yeah. You know what I'm saying? And we did a wick rejection, which symbolizes what? Even though the market, like we know how wicks tend to respond, like the market will try to come and collect that on the opposite side. You got to look at it for what it is on the higher time frame. You can see this wick rejection over here, and the market, the only thing it did was test that like a percentage. That's the only thing that I was saying is that the fact that we could have the market test that, a certain percentage because of that wick. But this is where the body is at. The body closed. We didn't close this monthly. We got 6 days before this monthly candle closes right here. You see what I'm saying? We got 6 days before this monthly candle closes. But look how this market opened up. It opened up bullish on a monthly time frame. To me, that makes me believe that we're still bullish for this entire month. You know what I mean? Like, I don't think wick rejections, especially on the higher time frame, you got to respect it just the same way we look at it on the lower time frame. If it's a wick rejection, or if it's a wick, normally what do wicks mean? They mean that the market is not trying to go there right now, and it moved from that position extremely fast because it's not trying to be down there. You can see each time we had a wick rejection, what did the market do? Ran away from that area. So same thing over here. This is a bearish wick, you know what I'm saying? But look at the trend, you know what I mean? Not to get confused, looking at the trend. And again, if we break this, then we know what time it is. If we violate this candle, this monthly candle turns bearish, we know what time it is. But we're not saying that. That's not even saying that the market is pushing all the way down. It could push down a percentage of this, keep the trend going up. You know what I'm saying? But I'm not even trying to think that, because I do believe that we're still trending up. We'll know basically this week where we should try to figure out the bias direction of the market and stuff. But again, we're up. We broke structure, you know what I'm saying? We broke a lot of these structures, resistance. We returned back to this resistance. This was a structural support right here. So the market tested it another time extremely fast. So we should push that up, but that's not saying that after we break this high, we can't come back to this area to test it again. You know what I'm saying? But I don't think so. I don't think so. If anything, I think we break this high and then maybe come back to this area, you know what I'm saying? Like that 41K after we break it. But we'll see. You know what I'm saying? I'm not trying to predict the future. I'm just looking at how the market is responding. Again, we've seen it. This was previous support, broke out of that structure. Boom, push the market up, push the market up. Resistance, push the market up. Each time we've been pushing the market up. The market is up. You know what I'm saying? Like, I'm not trying to, even when we came down, the market shot back up. Like, the market is up. Look at the stock market. The market is up, ladies and gentlemen. So appreciate everybody's time. Again, y'all know my focus is mainly indices. I believe that's where the money is. I am going to start looking at other things. I mean, I talk about crypto, Bitcoin in conjunction with indices. So whenever I look at indices being positive or negative, I'm looking at crypto to kind of emulate the same thing. They all do their own market cycle. So you can't say I'm going to buy US 30 and be correct and say I'm going to buy Bitcoin and it ain't going to be pulling down, or, you know what I'm saying, doing its own thing. That's just, fair warning, a red flag to watch out for. You can't just buy these simultaneously. You got to wait for their actual position. But that's where it goes to having your structural foundation set up, like your resistance, your support, things like that, to be prepared for the market. But man, Euro GBP, if I was still in that, it just moves too slow for me to just stay in there like that. Let's look at oil real quick. Oil retested this consolidation point right here. Well, that's what it looks like. I think this push down was just to clear out liquidity. And I think now oil is about to start getting bearish again. I don't think oil is going to come down to these lower positions. But if they do, that'll be cool. Hopefully that'll decrease the price of gas. But the way it's looking is that we just came back down in order to correct ourselves. Can't make sense of this market. You just gotta go with what it shows you. Yeah, and I think now that we're getting ready to be on a bull run. The fact that it's consolidating right here, struggling to push down, I think that we're about to get ready to go back on a bull run. So that's neat. That's good for investors who invest in definitely oil prices, because I was actually wondering how the state of like US oil and UK oil was gonna do. So that's all I got, traders. You know what I'm saying? I hope this information is valuable to you guys. You know what I'm saying? This is how you prepare for the week. I know this is our weekly overview, but because the market is frozen, I'm able to start deciphering information within the market that I didn't see while it was moving live. You know what I'm saying? So I always emphasize that this stuff is important, that back testing is important, but I do think that we're still remaining in our bias, and if things change, we'll obviously talk about it in the future, or whenever it presents itself. But I do think that we're still up, we're maintaining the support structure, and it's about to go on a major bull run. I think that tech rally is here, and we just have to respond accordingly. So thank you everybody that shows up at Digital Goats Academy. I will catch everybody on the next video, and everybody have an amazing trading week this coming weekend. Happy Memorial Weekend.